Stavros for M4Markets. Today we're going to close the week with pound and also Aussie because we have two very important and quite significant signals that we see on momentum. First of all, on the pound, we have a double divergence signal. Also suggests that all of this actual move might be an actual wedge, right? And wedges, you know what they do when they end. It's either they reverse completely or they correct before they continue higher, depending on whether they are of the leading or of the ending variation. And in this case, it could be either. We have corrected up to around the 80 something percent, maybe I would say 80, 84, 83 or so, which is quite deep as well. And that at the same time adds a bit more bias to the upside. However, we cannot ignore these two signals, okay? Especially since we don't see anything pointing at potential upside or further upside, at least so far. So it will be important, okay, as we actually fall now, it will be important to see whether any of the Fibonacci supports down at 122.20 is the first level, and then you go down to 121.38 are going to hold firm. What else we have to pay attention to is in case, of course, we start falling as much as getting down to around 128.30 or so, whether we're going to get prices returning back within this channel, because if they do, we're going to go back into the descending bearish trend, okay? So a little bit closer now, and we're going to see losing that trend line low is going to get us in some sort of volatile area where we could decide with price action between 122.80, where we currently are down around 120.160, 120 pips. Okay, so it is important to see whether we lose that bottom over here in the very short term as well. We came to the 50. So the 50 has held so far, which suggests that in the very short term, I repeat, sentiment remains biased up. Losing 122.60 is going to expose the beginning of this trend to the upside at 121.76. Now, when we look at the Australian dollar, we have a similar signal and we are much lower down on the trend. Okay, we have actually from the top just managed to retrace maybe some 35% of that leg. And what happens now, and although we are outside this this bearish larger trend, right, we are still correcting because we don't see clear progression in the market. And when that happens, although there is some bias to the upside of the 65-61 low, okay, there is some upside bias. Losing that low over here is going to open the door not just to 0.6564, but also lower levels. Okay. Now look at this. We retraced back to the 50%, which again tells us if you're going to get the 50 hold in, then probably we're going to see another leg to the upside, or at least an attempt to the previous highs in both cases. But if we lose the 66.60, which is not the number we want to see as well, that might be a hell of a of a move to the downside. So 62 though might do the trick, the 61.8 to be precise, the golden ratio. If we do hold 66 around 40 or so, then, and the channel of course a bottom, that might offer another leg to the upside. Now these to the downside, guys, also looks like a diagonal. And that, as you can understand, looks of the leading variation rather than anything else. So yes, maybe we're going to see a bounce, but if we fail to cross above the 60% of this leg, which is around the 67.20, I would say, then this is going to lead to a big move to the downside, because typically when we get wedges at the initial stage, the following wave, whether up or down, it's quite powerful. So that's it for the week.